Good evening, peoples. Happy election day. Hope you voted or still voting in some of the states, depending on where you're located. Okay, guys, I'm going to jump in here and do Roundhill Weekly. All right. And I'll compare also what it looks like since they've only been weekly for a while on the monthlies. So let's jump into the individual sheets, and I'll come back to the summary. So XDTE, the S&P 500, the underlying is down 67 cents since last week's declaration, but the payout is higher. So we went from a very low 15.35. That's one of the lowest, if not the lowest. Let's take a look. Do we have, oh, there's an 11% where it only paid 11 to 13. Okay, a 2, boy. I don't know why that number doesn't look right with 22. Oh, 2 cents. Oh my gosh. All right. So maybe it was early. So a 21-cent payout yields us 21.47. All right. So how does that, let's look again. That's the first November payment. So we had the green are the 5-week pays, right? So every third month. So we will see November, December, January should consist of 5 payments. And we'll see, this is a 20-cent average, right? If you got 5 payments and it's $1, this is more like a 22-cent payment, something averaging. This is under 20 cents average, right? So overall, our 4 weeks, this was a 25-cent payment. This is a 20-cent payment. This is like a 22-cent payment. So we're heading back up, but still not fantastic. But still, the S&P 500 has a lot more backing it. All right, so we were down 82 cents, right, compared to the close, 42.82 to 42, and we also improved significantly. It went from 20 cents to 26 cents. Okay. So that's pretty good. Let's take a look at how that chart looks on the monthly summary. But again, the month is made up of weeks. Okay, it was either a monthly payment or now, since they've gone to weeklies, it's weekly payment. So you can see that last month we had $1.47. So 5 payments, that's almost 30 cents a week, just short in the 29s. Okay. And look at this. We had a 4-week that was all the way up here. So that's over 40 cents. That's close to 45 cents. It's averaging. So you can see that in the, sorry guys, I'm on, yeah, that's QDTE. Okay, yeah, these were some of the big payments here that caused that number to be so big back there. And then it dropped. We had a 44, dropped down to 19 cents. That's cut in half. All right, so we've had a 31, a 26, a 21. So this is close to 21, another closer to 20, and then we jump back up. So they're both trending up, even though the underlying is down in both, right? So your NAV gain or loss, you went down 67 cents, but that's on $51. You went down 82 cents on $42. Let's take a look at RDTE, which is trending more up than all of them, but on the yield, it stayed fairly consistent. Only went 25 cents to 26 cents, okay? But its reduction on a $43 stock is only 22 cents versus like 86, 83 cents on the other. So that's kind of bears out what I'm seeing, the spreading out to the Russell 2000. So obviously the elections are going to send us up or down a lot in the markets. My gut is if Trump wins, he's winning a little bit early, but too close to tell. My gut says we end up with a Trump landslide. That's not showing my preference. That's just telling you what I'm sensing. And if we see that, and if he holds up to cut income taxes and stimulate the economy, we really could see a market easily go to the 6,100 number, and we may run longer for a month or two before that frothiness wears off. So let's see. Just clearly volatility, right? Oil should do well. A lot of things. If this early prediction of mine for Trump winning pretty readily, we shall see. I don't know, but that's my gut. And some of it is bearing out in early, but it can go anywhere. Um, let's take a look. I didn't do a chart on that because I don't really have enough data. You put a chart with just one full month, it's not relevant. I will when there's two. So some people ask about XPAY. Let me tell you what I know. I had to research it, right? I had saw the announcement. So what you're seeing here is a fund that is targeting a 20% yield. Now it's interesting. They're sort of saying, we're going to pay you a set amount and we're going to announce it and we're going to give it to you as return of capital, which means you're sort of getting your money back, but at a 20% rate based on us being able to do options behind the scenes on the S&P 500. So I like it, and people ask me, the reason I like it is if you're operating out of a traditional fund, a taxable account, this is preferential. If you want to swing for the fences and you're operating in an IRA or Roth or tax deferred type account, then this is no advantage of having ROC. Return of capital just means it's not taxed as ordinary income. There will be a tax, but only later when you settle. So if I buy an underlying fund, remember we talk about NAV erosion, NAV gain. So let's say I buy a fund, it goes down 10%. Let's say I bought it at $20. I hold it for 3 years and I sell it 3 years later for 21. Well, I had a $1 gain, right, on 20. So that's a 5% gain. But I got all of this capital back that then lowers my cost basis. So maybe my gain is 30%, but it's a long-term gain and I only deal with the tax based on when I sold that. Okay. So while I'm getting that income, so I have three different accounts. Two of mine are in IRAs and one is taxable. So I've always hated in my tax, even though I bought YieldMax and Defiance and I bought other funds. I was big into YieldMax, but I less favor them now. And most of you know, I didn't like the way they handled GDXY. I didn't like the way they handled Tesla. So I was hopeful the spreads are working. So far, it's a mixed bag. I don't really think they're working. I love Palantir. I choose to do my own options. I don't want to do PLTY, whatever they call it at YieldMax. Just my personal preference. So on this fund, I like it, guys. So it's interesting. It's a little hard. You're going to have to dig through the weeds here. So the fund was founded on 1031, and I'll go to my summary sheet, right? So you'll see it skewed with just a small result. So they came out and said, okay, it's declaration time. The fund's 5 days old, back on 1031. We have a closing price on that date. Right, let's see what it did yesterday. So, yeah, XPAY went up 57.93, but you always do the day before because that's when it was declared. So they're saying they're going to pay 97 cents. Well, when they say they're going to pay that, that covers next month. You don't have to ask what the distribution is going to be. So your yield based on whatever the price is going to go up or go down. Let's say it stayed at this 57.93, which is never going to happen. Then we could come over here and we could see that that's still around 20%, right? So whatever this number is, they're going to pay this next month. Now, what they'll do then for January, I don't know if they're just going to do 2 months at a time or they're going to try and go out and declare on the year. Because remember, they're by announcing that most of it is return of capital. Now, where this could drop is if the fund NAV is really going down, then they may not have as much money to pay you back out of, quote, return of capital. So this is an interesting one, but I think it's a little safer. A, it's S&P 500. You got a 500 stock base. And B, it's a little bit like what Yield Max and what some other guys did in these, quote, targeted funds, where we're targeting less NAV erosion and a steadier yield. Okay, so that's what you got here, people. That's my Defiance. Defiance. This is my Roundhill. Oh, I got to go over here, guys. Sorry. All right, so the XDTE, QDTE, RDTE, and then I put XPAY down here for the S&P 500. Okay, now let's take this one first. It's the weirdest one. So you see that the fund came out on 10/31 at 57.30. So the current price is 57.29, although it just closed yesterday at 57.93. So it has a gain there. But if I just take that 1%, I take my loss as 0.02. Well, when I magnify that out, okay, I get a 1.06 over time. But what happens in the dividend, they show, when I show the dividend is 97 cents, well, that's over 5 days. Or sorry, now today it's over 6 days, right? And it'll be paid, what, 2 more days? Yeah. It'll be paid on Friday. Yeah, pay date 11/7. Okay. So what you have there is this skewed. Remember I said to you, when you have a sample size so small, we're seeing that in RDTE, and the longer it goes, the more likely this comes down much closer to these guys. So that's why the 102% is skewed by this annualized dividend. They're saying, oh, wow, I got 97 cents. I only owned it for 6 days, and it stayed steady, and I got all this money. And if every 6 days I make 97 cents, well, you can't. It's going to go back to a monthly, right? And so you can almost ignore this, but I still do the calculation. All right, let's look at XDTE. Okay, so it is still finally where is this the current price? 52.47? No. XDTE. Remember that drop. I don't know if it's reading correctly. No, this is 51.80. Sorry, guys. All right. So I finally have a little bit of a, well, no, actually, yeah, I do. I have about 66 cents. That's a 1%. So that's all. It's saying that, all right, my dividend return is still 14.97, right? And then annualized, that's 22. So my small loss here, even annualized, because right now that's over 244 days, right? When I go over 365, it goes from 1.26% to 1.88. So these are close. Remember, I was saying to you, at a much, I got to put the right price here, though. Let's see what that does. Let's see if we go up. Oh, we're going to drop just a little bit. All right, so this continues to stay ahead, not in the yield. So all of you guys that see, we've gotten $9.98 versus $7.85. This is on a $52 inception. Now look, your mileage is going to vary because everybody always says, well, Bruce, I didn't pay that. Well, I had to pay, you can only use one number in here. Otherwise, my spreadsheet would be pages and pages and pages. Nobody wants to sit through that. So anyway, these are interesting. You're getting much higher yield here. and you're getting more NAV stability. All right, so how's this looking? Well, it's looking good. It's sort of my favorite of the group, but let me make sure I have this one. I thought it was just reading these automatically, but maybe I didn't update them on the other page. No, I'm just plugging in the price. I need to pick up from here, and that would make it so much easier. 43.10, not a big variance. I'll get that fixed for next week. All right, guys. So coming down a little bit, but that's why it's skewed, because your sample size is 57 days, right, since it was launched. And this is a more stable, you know, 8, you're talking 8 months, right? 8 times 30 is 240. So you can see that it's a little more than 8 months, right? Actually, about 8 months is just some of the months have 31 days. You can see we're now at 11.5, okay, 11.6, depending on where you are in the world. And but say 11.5, and here you start at 3.7, so almost 8 months. But if you use the 30-day month, you get a lower. All right, guys, so that's what I got for you on these. I think the trend for now is a Russell 2000. These elections are going to dictate a lot, people. The volatility is going to swing like crazy. All right, people, that's what I got for you again. This is Bruce with Targeted Wealth Creation. I'm not a financial analyst. This is not financial advice. This is for fun and entertainment. Have a good one. Bye for now.